Hey guys, welcome back to the channel. My name is Leo, and in this video here, we're going to be doing an analysis on Facebook or Meta platforms, however you want to call it. We're going to be looking at the stock, we're going to do analysis on the company metrics, the financial status of the company, and finally look at a price to pay for this company and if it's worthy of being in your portfolio. Without further ado, let's roll the intro and jump right into it. Alright, Facebook. Before we jump into this, guys, make sure you drop a like and hit the subscribe button. Helps the channel out a lot. Helps with the YouTube algorithm. Makes me feel warm and fuzzy inside. Okay, here we go. Facebook. We've been hovering in this $300 range. $323, but I'm kind of getting sources from... I think time of recording this video, they just reported earnings, and aftermarket has... It's dropping to about 250. So I'm gonna just pretend that it's just still this price, because until the market starts up the next day and the actual price is reflected, I'm just gonna go based off this, because anything can happen, anything can change. All right, almost $1 trillion company here, guys. Market cap at 800 or almost 900 billion dollars. Let's go into the company metrics and take a look. All right, PE right now it's at 23.11. We want this to be under 22.5, and our average is 26.58. All right, so we're beneath the average, but not quite in our ballpark just yet. Earnings per share at trailing 12 months is at 13.93, and average is at 8.77. Not only are we above the average, but that's pretty high. Pretty high. Amazing. Good. All right. I don't want to just dwell on that, but return on equity trailing 12 months at 29, almost 30% compared to 24 at our average. Guys, we wanted to look for companies that have return on equity to be over 15%. So this company does a phenomenal job of getting return on their equity on both the 5-year average and the return and the trailing 12 months, and we're beating that number. That's amazing. Profit margin is 33.38%, so a decent profit margin compared to our average at 34. Revenue, so we got $117 billion. Net income is 39. Free cash flow 39 as well, and our average is 23. Okay, so we're beating the free cash flow average, and we don't pay a dividend. All right, sounds good, looks good. Return on invested capital, 32.28% compared to 25.56 as our average. Guys, we want this number to be over 10%. Currently, in our trailing 12 months, we're triple that. And the average return on invested capital is 25, and that's double that. Phenomenal. Almond Z-score, that's 17. We want this number to be over 3. And essentially what the score does is measures the likelihood of a company going bankrupt. Over 3 means that the company is safe. Under 3 means that it's in a gray zone if it's between the numbers of 1.8 and 3. And beneath 1.8 means that the company is in distress. Facebook is nowhere near any kind of distress levels. They're an extremely high number. It's probably the highest I've ever seen so far. So even though Altman Z-score for Facebook is really high, we treat it like a grain of salt. I was going to say grain of sand and salt, and that's why it came out weird, but treat it like a grain of salt, because this typically reflects more with companies that have physical inventory on hand, manufacturing companies, something that's more tangible. Facebook being tech, obviously that doesn't really exist, so just keep that in the back pocket and just treat it as such. Piotrowski score, we have it at a 6. Very interesting. I thought this would be higher. We want this number to be between 8 and 9. 9 being our highest. 8 is also really well, or also a really strong score. 6 is kind of in that mediocre category, and essentially what the Piotrowski score does is it measures the total assets, liabilities, and it increases in return on assets along with other 9 different credentials over the last couple of years, or more so the year before to the current year, and seeing if the company has either improved or stayed stagnant. So Facebook has scored 6 out of the 9 criteria correct, and we want this to be either 8 or 9, so it didn't hit that, which is somewhat surprising. Let's go to financial evaluations, and as we can see here, we scored a 9 out of 10. And our only red mark here is our 5-year PE average. We want this to be under 22.5. It's at 26. So, guys, pretty solid company thus far. Let's just go through them and just see this. This is the 10 I guess the check marks that I do to kind of grade where the company currently stands. So our current ratio is at 3.15. We want this number to be over 1.5. It's double that. So that's good. That means it has enough assets on hand to cover any kind of liabilities if it had to liquidate. So that's great to see. Return on equity, we have it for our average, it's 24.05. We want this to be over 15, as I said, and it crushes that number. So awesome. So we got a check mark, we got a point there, a point there. EPS growth, I have it at 1,300% increase over the last 5 years. I mean, like, the numbers don't lie here, folks. That's good. As as a shareholder, you want to see this number increasing. You want to see them bringing in more money. You want to see your shares actually being, you want to see the earnings per share increasing. So, and Facebook's done a really good job of, as we can clearly see, increasing that number. Debt to equity, we want this number to be under 50%. We have it at 20.41%, which is phenomenal. What this means is that Facebook is using financial leverage through equity and not taking on debt. So being at 20%, awesome. Share dilution, this is a huge metric here, guys, huge checkpoint. So we have it at negative 1.30%. What that means is that Facebook is buying back shares. Now, that makes sense if the company's stock is undervalued. And why this metric is important is because if a company is issuing you more shares, you're actually losing ownership and percentage of a company. We want companies to be buying back shares because that'll increase your ownership percentage of a company. So Facebook has, even though it's a small amount, they're still decreasing shares outstanding, which is phenomenal. 5-year net income growth, 147% increase. 5-year free cash flow growth, 123%. All right, so we're getting points across the board here. 5-year return on invested capital, 25%. As I said, very impressive. We want this to be over 10%, and we've hit that plus some. It's double. It's more than double. And then 5-year revenue growth is at 33.97% over the past 5 years. Guys, that's insane. For the record, if I remember Intel, which is a $200 billion company, and I think that scored 7% increase over the last 5 years. This is Facebook at almost $1 trillion valuation. Put that into perspective, like, this number here is really cool, like really fast. That means this company is growing rapidly, and like it's growing quick, it's growing massively too. Like, to see these numbers at this market cap, that is phenomenal. So that is unheard of. This is Facebook, the Zuck train, man. There's not running out of steam just yet. I think they got a lot of things going for it. I mean, this whole metaverse thing that's kind of happening, and where that can lead them, I think there's a lot of potential still with this company. I think Facebook's kind of hitting a second wind. Not saying that they were going down before, but this whole metaverse is going to spark up some new flames with Facebook. So without further ado, let's jump into a price analysis and see what we should pay for Facebook. Okay, current price here, $3.23. 10-year analysis, as always, because I think Facebook's going to be around for a long time. And look at these numbers we have to play with, guys. 33, 37, 33, 42. I'm going to jump with 33 being our low point. I'm just going to go 30, 31, 30, 32 here. I'm gonna try to be super conservative compared to what we have. But man, like those are some insane numbers for revenue growth given the current market cap of this company. Now profit margin, we have 27, 34, and 33. I'm gonna just stick with that 27 number and go with 27, 28, 20. Actually, you know what? I'll go more conservative. Go 27.5 to 27 to 28 with a 27.5 in the middle. Free cash flow margin 33, 29, and 30. Okay, I'm gonna do 28, 29, 29.5. Price to free cash flow, drop it down 14, 16, 18. Wait, 10 years from now? Yeah, and then PE ratio, we'll do it at 14. I want to do 14, 16, 18, but like I'm just trying to think like what would make sense. Maybe do 12, 14, 16, and then we'll see what the numbers come up, and then we'll change that to be 14, 16, 18 to see if that is a better reflection. But let's see. Because this would not make it fall in half here from our current PE, and companies should be slowing down growth by that time. Anyways, let's plug in the numbers. 30% return as always. What in the world? Huh? Yo, are you guys seeing this? Look at that. $2,000 as our average price to hit a 13% return. My God. So, green across the board, but not just any kind of green. Like this is like gold mine green. Wow, that's insane. Wow, that's insane. This is... Guys, if you believe these numbers right here, it means Facebook is a buy all day long. Let's see what... My God, and the prices, I know the price for sure. Now I'm recording this video has gone down at post market. I'm wondering if it's gonna stay down tomorrow. But because assuming it hits these numbers, I'm gonna change the revenue growth because I don't think this makes complete sense for the next 10 years. So I'm really curious to see what it looks like at 10, 12, 14. Okay. Okay. Literal fractions, guys. Literal fractions of the current current revenue growth that we have. Numbers here. And we're getting it at 404, 541 on the high side, 292 on the low side. I'm very curious. I'm very curious if this number is the number. If this is what I'm saying. If this number, the date of recording this video is February 2nd, and tomorrow February 3rd, if the current price opens up lower than this, I'm gonna probably buy Facebook personally. I'm gonna be buying Facebook if it's beneath this number here. But even in here, this middle category here of $400, that is phenomenal. That is crazy. I mean, the company knows how to make money. It's so prevalent in like, it's so prominent in so many different spaces. It has Instagram, it has WhatsApp. I gotta stop getting excited about this, but I've been wanting to own Facebook for quite some time. I just need the numbers to make sense. Now, granted, if this number checks off, because these are some low assumptions, like even let's do 25, hypothetically. Let's even do 25 here. 263, 250. Okay. So if we're in that 260 range, by some chance tomorrow, even 270. You know what? This might be worth adding. Wow, this is actually saying something, guys, because this market's been completely overvalued for the last, I don't know, few years now. So to see something that's like a big, this is a FANG stock. It's the first letter of the FANG stocks. To see this in undervalued territory is actually pretty impressive. All right, but I'm not saying go out and buy Facebook today. Obviously, there's more due diligence to be done. As far as the due diligence that I've done, I essentially was waiting for this price to come down to a specific amount. I think if assuming this is right, let's see, even just plug in some more numbers here. Look, like, sure. Even if we just keep the profit margin, like it's gotta see. Yeah, keeping the profit margin the same, keeping the price to free cash flow. Yeah, like whatever numbers I kind of throw at this thing, Zuckerberg is gonna get me again. He's gonna get me again. Anyways, guys, if you enjoyed this video and like the software that I have in front of me, you can have this at some point. I'm developing it into an app. Let me know if you would like to have it. I'll put you on a list and we'll go from there. It's going to be either a web application or a mobile app. I'm still working out with the developers what's the best course of action to take with this. But this is my opinion. Those are my thoughts on Facebook. It might be one of the top value plays 2022 so far. Assuming whatever number gets reported, if it's much lower than this tomorrow being February 3rd. We'll definitely follow up with that afterwards. But yeah, that's Facebook. Solid company. Only really red flag was the PE ratio, but you know what? This company's growing at 30% a year, and even if it can continue with that number at 10%, even 11%, which is a fraction of that, like I'm not even mad about that. I'm not even mad about that. You paying a premium for that amount of growth? Sure. Whatever. You know what? Not even bad about that. Not even mad about that. As long as they keep the dilution down, if everything still stays the same, I'm super happy. Like this is a business that's just it knows how to make money. Absolute machine. If you found this video informative, please press the like button and hit the subscribe button for more content like this. Share this video with a friend and let me know in the comments a company that you would like to see analyzed. I'll run it through my software here. I'll make a video on it. We can go from there. Let's all try to help each other out, guys. We're all investors. We're all trying to make some money. We're all just trying to learn and, navigate through this overpriced market to try to find some gems. And I believe Facebook is one of those gems. And with that, take it easy.